Hey everybody. Good morning. Not sure why it is that everybody loves to talk to me right at 9:15, but got like 8 messages from people in the company and then my dad and I'm just you know, just one of those days. Seems like every day is one of those days. Right at 9:15, everybody loves to just ask me questions. And welcome to the show, everybody. We are back to talk about something that hasn't happened in this country in like 40 years. 40 years. My morning monsters, welcome back to the show. My grandpa used to tell me stories about a mythical time, a lost civilization, a time when America made stuff. We made big things. We made stuff out of steel, out of sweat, out of sheer industrial might. He talked about factories humming along, about a nation that built the world and had calloused hands, actually looked like people went to work. I used to think, you know, those are like tales of Atlantis, maybe politicians that possibly kept their promise, but we know that's not possible. Because most of my life, Made in America has kind of been a joke, maybe more of a museum plaque than a reality. I mean, we've become a nation of importers, service providers, people who get paid to yell at each other, post memes on the internet. We don't build, we don't construct, we just buy. And nowhere is this more true than with the metal that's literally in just about everything you possibly own. That metal, aluminum. Your phone, it's got aluminum. Your car, it's got aluminum. Airplane that you might be about to hop on for vacation, it's basically a giant flying aluminum can. It's a critical material for everything from monster cans to fighter jets, and for decades, we just kind of decided that it's better to just buy it from somewhere else that refines it. In fact, a staggering 85% of the aluminum that we currently use in the United States is imported. We outsourced our strength, our industrial backbone, to countries like China, who now produce more than half of the world's entire supply of aluminum. It's been a slow, quiet decay over the, last 40 years or so. The last time the United States built a new aluminum smelter, the top song was Physical by Olivia Newton-John. A gallon of gas was $1.25, and the DeLorean had just rolled off the assembly line. The year was 1980. 45 years ago. And we've built nothing since. We let our smelters go dark one by one until we just had a couple left, maybe even less than a handful, sputtering along on dying embers. But then something unexpected happened. A little spark in the darkness, a news story that sounds so crazy, so out of place in 2026. I actually had to review it 3 times to make sure I wasn't hallucinating the fumes of this monster here. Century Aluminum, an American company, just announced that they're going to build the first new primary aluminum plant in the United States in over 4 decades. And they're not just building a little boutique smelter just to do some artisanal aluminum foil for hipsters. They're building a monster, a behemoth of a plant in Inola, Oklahoma. It's going to be the largest primary aluminum plant in U.S. history. This single plant is projected to produce 750,000 tons of aluminum per year. Now, to put that in perspective, that will be more than double the entire primary aluminum output of the United States right now in one plant overnight. It's like we've been manufacturing in a desert, or maybe we are manufacturing desert for half a century, and somebody just announced they're going to build the Hoover Dam in the middle of it. I mean, it's a project so big, it's expected to create 1,000 permanent jobs and 4,000 jobs during construction. This isn't just a factory. It's a potential seed for a new industrial hub right in the heart of America. So the billion-dollar question in all of this is why now? Why, after 45 years of tumbleweeds and factory graveyards, is somebody suddenly willing to bet billions of dollars on American aluminum? Well, you can thank a little trade war. Part of this, I mean, those tariffs back in 2025, so long ago, the Trump administration slapped a 25% tariff on steel and aluminum imports, which later got cranked up to a whopping 50%. The idea is to make imported metals expensive and force companies to buy American, but there's no American to buy. So that's the rub. And the sarcastic parts of all of this, it's kind of sort of working in a clumsy, messy, controversial, extremely controversial kind of way. But it created price umbrella. Suddenly, making aluminum in the United States is, despite our much, much higher labor costs and way stricter environmental regulations, it's not actually a completely insane idea. American buyers are now paying a crazy 68% premium for physical aluminum over the global price due to all the tariffs and junk. I mean, that's kind of a powerful incentive to somebody jumping in to this market. This isn't just about economics, though. It's about national security. The pandemic and the global supply chain that followed, it was kind of a brutal wake-up call for our country. We realized that depending on geopolitical rivals for critical materials, the stuff you build your fighter jets and battleships out of is, well, pretty much a terrible idea. So there's a huge push for reshoring or onshoring or, building giant aluminum plants, bringing those critical supply chains back home, at least at some kind of baseline, so we can actually survive if everything else gets cut off. Now, this story gets a little more interesting when you actually look at who's involved and how we could take advantage of it. See, on one side you have Century Aluminum. Their ticker is Charlie Echo November X-Ray, CENX. They're the American partner, but they've got a 40% stake. They're a survivor of one of the last dying breed of aluminum producers. For them, this is a chance to be a phoenix from the ashes. But they're not doing this alone. The other 60% of this venture is owned by a company called Emirates Global Aluminum. EGA, Echo Gulf Alpha. It's actually a state-owned behemoth from the UAE, United Arab Emirates. And they're actually the world's largest producer of premium aluminum right now. They've got the cash, they're bringing the money, and more importantly, they're bringing technology. The new plant is going to use EGA's proprietary EX, Echo X-ray, smelting technology, which is a 10th generation smelting design. Way more efficient, way less energy, and way cleaner than anything we've ever had in the United States. So in a weird twist of global capitalism, we're importing foreign capital and technology to build American industry. I mean, we're supposed to be the technology leaders, but you can't make this stuff up, right? We've fallen behind. All right. So let's get to the part you've been waiting for. How do we, the savvy monsters of the markets, play this thing? How do we make some money? There's a few angles, right? The first obvious direct play, Century Aluminum, CENX. I mean, they're the direct American beneficiary of this project. Their stock already been on a tear, but this plant, it's not going to even be operational to the end of the decade. This is a long-term story. I mean, we're talking, it's going to take years to build this thing. Now, the other major U.S. player, Alcoa, AA, Alpha. It's the biggest aluminum producer in the country. They benefit from the same high prices, the same reshoring trends that are making this new plant possible. and think of it as a rising tide possibly lifts all boats situation. Second, the indirect play, the ripple effects. I mean, who else wins when you build a giant factory? Double the domestic supply of a absolutely critical metal, aerospace and defense. Companies like Kaiser Aluminum, that would be Kilo Alpha Lima Uniform, which specializes in high strength aluminum for planes and military hardware, they're going to love having a massive new domestic supplier. It means a reliable, more secure sourcing for them. And the push for more fuel efficient cars, especially EVs, this means more aluminum. The domestic supply chain is huge for car manufacturers. You can't build $1 billion plant without a whole lot of construction equipment. And the revitalization of an industrial area means more infrastructure spending down the line. This is a macro theme. It's a bet on re-industrialization of America. It's a bet against the idea that our best days are behind us. The market is already pricing in some of this optimism in this industry. Goldman Sachs recently jacked up the price for aluminum to over $3,100 a ton. The wind is at the back of this industry for the first time in probably a generation. So what does all this mean, though? It means that after a half century of decay, the phoenix of aluminum may be rising from the ashes of America's industrial heartland. It's a story about tariffs, technology, and a strange alliance between struggling American companies and Middle Eastern powerhouse. It's a reminder that the world of investing, sometimes the biggest opportunities are found in places that everybody else has written off for dead. So let's take a look at some charts. I mean, this could be an American manufacturing renaissance or just a tariff fuel blip. Billions of dollars spent and we never see the plant. I don't know. We'll see what actually happens. We'll jump into the charts, check out how we might make some money today. So, anyway, jump over here. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Trading any of those things, you might lose money. I mean, the statistics say that most people are going to if you trade them. And if you desire personal financial advice, hire and consult a financial advisor. Welcome to the show, everybody. So, yeah, I mean, taking a look at AA, it's been on a tear. But when we zoom out, this thing could have a long way to go. Been an industry of ups and downs for a long time, literally. The last time we really built new plants, all the way back here. Crazy. And then CENX, another chart of crazy ups and downs. This one's on an absolute tear also. Absolute tear. So be careful out there. It's going to be well out here before they get the plant open. This is not a short-term play. Could we experience another one of these pullbacks? Absolutely. Be careful out there, everybody. Be careful. Aluminium futures, AL, COMEX, ALI. See, aluminum itself on a pretty good tear, $3,300 a ton. Long time it was hanging out at $2,200. So there you go. There's a little update on the aluminum industry. A lot of people hyped up on copper, including my copywriter. And as I said, this is probably going to $8. It's probably going to pop on up. Got the high, got the low. We're probably cruising on up. This could be a bigger trend in copper. 6, 7, 8, maybe even $9 a pound. Be pretty crazy. It's wild that these are trading like almost like precious metals. This is one that hasn't really started ripping yet, and it kind of messes with me just a little bit that we haven't actually seen it taken off yet. This is palladium. If this thing starts ripping, we could see this up here at $4,200 an ounce. It's kind of the sleeper in the precious metals arena or industrial metals arena. PL already ripping. Yeah, HG already broke out. So we could see these things really start to play out. And aluminum, if this was the low, this was the high, this was the, look at this. Talk about inflation ripping back. Like, if this actually were to go skyrocketing, we could see this up at $5,600, even $7,300 a ton. Everything's gonna get expensive. We get that kind of spike, and recycling aluminum cans is gonna be lucrative. Anyway, looking at the market here. Starting out with ES overnight. This is the S&P 500 futures. We got a little bit of chaos on the big tech earnings last night. I guess Microsoft kind of took a punch in the face. Ouch. Looking at that right there. Almost. Oh, look at that. Right into the target zone. Probably going to come down here. As I said, 415 to 420 area. And 430. We're really darn close. Probably going to push in there today, it looks like. So, got that one right. Meta. Look at that beautiful pop. Broke through. Boom, shakalaka. I like it. Then Tesla, Salah. This was interesting because Elon announced discontinuing 2 cars. Last night we saw a dip right down here. And then we're pushing it right back down to that level, 425. Looking at the daily charts. 425 was right down in here last night. Not far away. We're just kind of chugging along here. No real big reaction here. We're sitting at this 618. We've been there a couple days. If we're gonna hold on to that, we get bounced. But if we don't, if we bust through, as I talked about yesterday, probably coming down here. So that's what Tesla looks like. No real big surprise. No real big reaction. Had a nice pop overnight, but taking it right back this morning. Disappointing. Apple coming up after the close today. I got no real strong conviction on this chart. Have to say. No real strong conviction for a pop or a drop. The resistance is right there. Support is right there. If it does, like, what was it? AVGO, I think it was. Yeah. If it does like this, we could see it dipping further into the roadmap line where we kind of got this initial drawdown, then this little bounce to a resistance, and then pulling on down. And this looks like it may have one more to go on AVGO before it's finished. So Apple, yeah, it's kind of a coin flip. May not move at all. And looking at the expected move. Coming in here, 257.50. Sell both sides. Looking for a $9.80 move. So basically a $10 move up or down. And at this point, $10 up would be right around 267, and $10 down would be 247. So that's the range that the market makers are planning or pricing in for it to stay inside right here. Resistance right there, so the downside would probably not be as steep, but if we broke down, we could push well on down into the 200 area. And I just don't expect any big news from Apple. I just don't. So that little bit of chaos on earnings, just a blip. Tag the 30-minute roadmap line back up to the 618 resistance on this 30-minute pullback. If we push on down, downside, first move down, second move down, support down here around 69.60 on ES. SPX cash doesn't have that kind of move, and we may see this push down to the roadmap line here on the 30-minute, 69.40. Fits, it ships, it jives. Those kind of match at this point. We did tag all-time highs yesterday on S&P, NASDAQ. Got close, but no cigar. Close, but no cigar. So this has probably still got upward momentum to it. Probably still got some upward bias. Broke out. We got some strength. We hit that fib line for this last pullback right here. Coming up. May have to retest that breakout before we push on higher and get the new all-time high. It's kind of what it looks like. In Q, looks like we're coming back down to test the 30 minutes. If we can hold it higher. If we start folding it, though, watch for a deeper retrace. That'd be the indication with the futures. Russell looks like we may have topped it out here, at least in the short term. Building in this smaller time frame, we're kind of building a head and shoulders. This can take on a deeper retrace, so be careful. Chasing after small caps. Things are starting to get a little treacherous here. See a step back, bigger picture. That's just the retrace I was talking about. Retesting the breakout once again before we can go higher. But that could be 100 points off, which is fairly significant for Russell. Especially if you're in something like UWM. Can't shake this freaking cough. Ultra Russell here. Leverage Russell. The pullback can be pretty vicious, and then 63 on the upside. If we can get it going up. So I'm watching Russell. It's like a canary in the coal mine. If it starts breaking a little bit, we can see a bigger downdraft. But this the whole AI hype bubble thing, we could see Russell start breaking. We could see ES start breaking, and then NASDAQ could keep ripping. Even though it's been lagging, out of these three indexes, NASDAQ's been lagging as we came into the year. Hasn't made new highs. We've got S&P 500 and Russell making new highs, but NASDAQ has not. That's fishy, if you ask me. So we'll look at the R2TW. Already heading back down. Probably going to need a bottom down here in the lower quadrant around the 20s before we can go higher again. the Indy, these are a market dashboard of sorts that I look at just to kind of tell me where we are. This is stocks above their 20-day moving average for the Russell. We've got the same thing on NASDAQ. This is interesting because even though we've been pushing higher, the participation rate is drifting down on NASDAQ stocks above their 20-day. And then look at the S&P 500 stocks above their 20-day. We're seeing the same kind of thing. Despite it making a new high, this is drifting off. So we're seeing less participation as we go higher, and this is probably going to spark off a bigger correction. Just the way the market works. So these are things I keep track of, try to tell me where we are. And this thing going absolute crazy. This is price to sales ratio for the S&P 500. Yeah, this is getting ridiculous. Never been this high before. Looking at oil. Look at that breakout. If we can stick this break through this downtrend of highs that we've had going for like 3 years, if we can stick this breakout, oil can go ripping right up to 100, 101, right up here to this resistance. Gold, adding another $300 overnight. Holy pistachios, Batman. This is going to end poorly. But obviously, we're gunning for this next fib line up, like 6,900. Bitcoin keeps suffering. As I said, that's not bullish price action. We're probably going to see this dip right down in here. Might happen this weekend. We'll see what cooks. If it fits, it ships, and this looks like it's fitting and shipping, and we're probably going to see the Bitcoin and Ethereum take a new dive. But like I said, if we make that lower low, it can kick off a multi-month, 3 to 4, maybe 5-month corrective rally. It won't go new all-time high, very likely. We could get up near the highs, but probably not going all-time high. Probably going to clean this up just a little bit. If we dip on down in this zone, come on now. I need the fib line to put us right down in, let's just go with 77. The ideal target I had there. So that would put this resistance up here at 108. But the whole big zone is like this. So we could see something up to like 115, 116, and possibly something as low as like 100. Yeah, that's the zone right there that we would bounce to. And it could take well into like May. If we spike down there right now, we could start this rally and do something like that. Stall out, and then later in the year, later in the summer, take a spill down to another lower low, possibly in the 30 to 50K zone. I know a lot of people don't want to see that, don't want to hear that, but that's what we got cooking right now. And I've warned crypto winter. That's pretty much what we got cooking here. So 12-month correction from this October high. Put us out here. So probably see a dip, multi-month rally, and then something down in here. Then we could actually build the next rally. Next rally should last about 3 years before we go to the top again. Ethereum, same deal. NKD, probably going to get a drop down to the roadmap line at some point here. It's just consolidating with lower highs. And Trying to see if I can see some price action that looks similar to what we're doing right now, but I don't. Yeah, we could go sideways for a while. We could do another one of these in NKD before we dipped. So we could just churn right here and not really have any global liquidity increase or decrease. Dollar took a big spill and just chopping around down here. Not really moving around much. I expected this will either go fast, take like 8 days, or it's going to be a much slower process and take like 3 months. I don't know which one it's going to be. It's just based on the theory of alternation. This took about 24 days. So this is either going to go really fast, which right now it looks like we could play this out pretty fast, or it's going to take a while. It's going to chop in here for like 3 months and then finally take a spill. You know, was this the long one or the short one? I don't know. Usually the wave 2 is the wave 1, wave 2. Usually the 2 is the fast one and the 4 is the slow one. But this could have been the long one and this could be the short one. Just don't know. This wasn't very messy, but I guess we'll see what happens for dollar. But dollar probably still has lower to go. This is probably not finished yet. Could be finished, but it's probably not finished. Apple we already touched on. Amazon has earnings coming up next week on Tuesday. And I'm looking for this thing to get that continuation up to that 265 level there. 265. That's what I'm looking for. Google also has earnings coming up next week. And right now, we're sitting here trying to push out to new highs, 343, 346. The big upside, 385. For the next fib line on the ladder. This did retrace, kind of backfilled here. Sets the stage for that next rung on the ladder. The higher this goes, though, the bigger the potential correction. You look, there's no roadmap here. It's all the way down here at 267. That's how far down support is basically at this point. Meta, probably going to retrace a little bit. Maybe come back to retest the roadmap line before we can actually break on out to new highs. Microsoft, as I said, probably cruising on down to that. Probably the way this has been going with all this grinding, we'll probably grind it on down there for a couple days maybe. Nvidia still stuck between the 195 resistance and the support coming up here. If we break below that, back test the breakout at 150 from a year ago. Nothing really changed here. It's not really been doing jack diddly for 6 months, 7 months. Just kind of boring. Tesla, like I said, probably going to dip down, hit the roadmap line without, since it didn't just rip on earnings here. Probably going to do a dip. That's what it looks like we're going to do. There's the potential we hold this, but yeah. Netflix, back to the lows. If we can hold on to the bottom of the box, it's good for a bounce, but if we get below the bottom of the box, down to the 60s is the next support. Looking at, save this, and ASML shouldn't have been the top gainer. Should have been, no, Meta was the top gainer. Already had Meta on the list, so. Reload, refresh. Yeah, ASML. Hit that fib line yesterday, or pretty darn close. The fib lines are not solid levels necessarily. I always think of them as zones, plus or minus just a little bit. That pretty much tagged it yesterday. So watch out for the retrace. Although the next fib line up there is 1600, and it's probably on the way up there for the bigger pattern. It may do a little pause and before we get up there. TT. I go pull, these gainers are things that were moving up $2 more in the pre-markets. And I have decliners on the list too. I usually hunt for opportunities in here. Also bring some setups. There were only 3 of those today. Things that were set up for an entry today based on the roadmap pattern, which is this trend pullback continuation pattern. We get a close above the 618. Sets up 75% likely. We go up to the 1.1448. 75%. And this one did not close above there yet. So waiting for that close above 422.91 on TT. Royal Caribbean. Yeah, if this one can stick it today, 387 upside. IBM didn't actually get the bounce on the daily. This was a 4-hour bounce. Let's turn off the extended hours. And looks like that was the low. If we close above here today, should kick off a 328 target. Probably already did back here. Anyway. Lockheed Martin. Yeah, usually I'm not so hilarious when I'm looking at charts. My brain's going 100 miles an hour here. Jack and I, if you check out the link in the description at 11:30, Jack and I usually have a co-host on Market Masters at 11:30. We're on Zoom. We bring a lot of comedy in that show. I usually bring the comedy early, and then when I'm looking at charts, my brain's going 100 miles an hour trying to actually figure out how to make money today. Carvana back to the roadmap line, and if that's the bounce, high low, need to close back above the 436 for 508. Shiny, man. It's gonna gold is gonna be an explosion of epic proportions. I'm pretty sure, as in people are gonna lose their shirt. Probably some other S words. Copper being pretty ridiculous here too. I mean, copper hasn't actually moved yet. SCCO is being crazy. FCX, if you jumped on that, we're almost to 80 already. I mean, good grief, man. This is so ridiculous that CopX, look at that, right up to the fib line. This is going to end so badly. It's gonna be all over except for the crying in the beer. METU, I still haven't bought anything. I'm hesitant. Somebody asked me yesterday in Discord, like, why do you have a love-hate relationship with Facebook Meta? And I was like, I watched the IPO, on FB, now Meta. I watched the IPO all the way back here, a jillion years ago. It feels like in the market time. And when it IPO'd, I thought this thing was like, I was like, how in the world are they ever going to make money? This is going to zero. This is going out of business. Like, they have, I don't see any plan to make money. But they IPO'd, brought in billions of dollars, and used that to build their advertising empire, and then turned all their, this was like for college kids back here. It wasn't the thing that everybody and their mother was on. And somewhere along the way, everybody started getting on it and sharing stuff, and ads for everything from PP pills to things I don't even want to think about. I've been on there, and they make money off of that, and it's been a monster. But then they tried to do the metaverse and got punished for that. But then pivot to AI, and we're back to ripping again. So as long as they can use AI to, extract money out of people. Crazy story. But every time I've ever tried to touch Meta with a trade, I lost money. So it's kind of like this hot stove thing. Like, try to make a trade, lose money. Try to make a trade, lose money. Try to make a trade, lose money. How many times do you do it before you just decide that you and that ticker don't get along? And that's why I have a love-hate relationship. I can predict where it's going, but I can't seem to make any money off of it. So this is likely to break out, go to 1100 to 1300, but Probably take a few years to get up there, but target's up here. But I'm not sure I'm going to get a piece of it because I just never seem to make any money on that one. A lot of these charts are ridiculous. WDC, freaking ridiculous. PPLT, hitting the next target up there. You know, I expected to tag 270 before we get a pullback. GLTR, crazy move. ETN. Now, the gold and silver move might continue until COMEX runs out of silver. And at the current run rates, COMEX, which is the, COMEX is the commodity exchange, COMEX, they've got, billions of ounces of this stuff in the vault, but at the current run rate, come March, the vault's going to be empty. At the current delivery rate that's being demanded for silver. If the COMEX vault gets empty, and already the London vault is running on fumes, if the COMEX vault in New York gets empty, what happens? You'd be like, well, it's going to go parabolic, except SLV is paper silver. This silver doesn't actually exist. It's like leveraged 300 to 1. Like for every 1 ounce there is, they've sold like 300 ounces of paper silver. And they fail their auction or fail their audit. So if this hiccups, does it have to go into liquidation? And then you're left with nothing because there's no silver to back it up. Sounds like a lawsuit, but there's no money, there's no silver. What do you do? So this whole gold and silver run could continue until that event happens out there in March, where the COMEX vaults are empty. So that's something to watch out for. Now, how would you protect yourself? PSLV, physical silver. Sprott has, they won't issue more shares unless they have the physical silver. This SLV, PSLV passes their audit. The actual SLV does not. The actual GLD, the main fund here by Spider, fails their audit too. This is paper gold. So be careful. There's a black swan type event, a big risk if you're trading those, that they can be liquidated because they're just paper and they don't actually have the silver and gold in the vaults to back it up. MasterCard still dropping. Caterpillar still popping. GE Veranova. Man, look at that bounce. Hit there, retraced, come back up, probably going up to 680 or 785. OIH ripping on higher, probably due for a correction, but maybe this is part of the bigger breakout here that we did on the weekly charts. Here's the high, here's the low. 399, 433 on the upside. PBLT, TLTR, COPEX, ridiculous move. AMAT, probably coming out to 401. MU, watch for the pullback. This is going to end horribly. Reddit, coming on down. Support zone right down here around 160, 170, 180. Lower low would satisfy the move, but if we break down below this zone right here, could embark on a bigger retrace down to like 80 to a 100 area down here. AEM, ridiculous move. Bulls. This is Innovators, 3x leverage. Just not moving. Look what's in there. About this fund. Yeah, no holdings, huh? Interesting. FCX, as I said, this is probably running on up to 80. ICOP, iShares Copper, Ugly, Ultra Gold. Man, look at that. Look at her go. Shopify. This made a lower low, barely, but it made the lower low. So if we can break back up through the 162, 190 would be the upside target there. Visa still hunting a low. VRT still, oh, that's 212 on the upside. It bounced. GGLL. Google Long. ALGM. Now, if you want to trade Palladium and cut and potential for this to go ripping, 364 up here. Rio Tinto. Wow. That's probably running on up to like 111 after this long consolidation. Break higher. 111. Anything. Be careful trading this one. I don't know if that's the bottom yet. XOM. That's just being ridiculous. This. I guess if we take USO out to 100, then it's been a long consolidation here. XOM and other oil producers could go on a run. Love looking like we're coming back out of the ashes here. Can this get continuation? Here's the low, here's the high, here's the low. 51 next resistance. Let's see, Starbucks was making a big move, but bringing it all back. That's a pop and a drop right back down into the slosh. Yeah. I gave up on this one. It's just in this giant, like this is probably going to continue for a while here. We're going to keep pinching this one possibly for 2 more years. And then does it break down or does it break out? It's like Costco, break out and go on an epic run. If it's like some other stuff, it'll break down and might go out of business. Wow, look at that run, man. Whew. Gold and silver stuff. All right, things that we're pulling back. Maybe has better opportunities here. CSW. No roadmap line, no chart, no nothing. This could be a 618 bounce, measure bounce. First move up, retrace. Next move up could take us up here, 386, 400. Into it. Oh, man. Punch in the face. Hit the target and retracing. So looking for support to show up somewhere down here. Here's the low, here's the high. We're in the zone for supports, but if we get below this 450 area, probably going to come on down to 300. For solar, we hit the target area and retrace to the roadmap line. So looking for this to hold the roadmap line, turn back higher again. Go on another run. If not, watch out below. Makes me wonder about CSIQ. Looking for that to tag the roadmap line. MDB. Tag the roadmap line. Hubs, spots. Whew, it looks rough. CRM still diving down. Dive, dive, dive. Ooh, we're getting close on the target down there. Man. If that tags the target, I'm going to be shocked. I predicted this correction, like, I guess when it first came off the highs up here early last year, I drew this bubble down here. If we actually hit it, I'm going to be, I don't even know. I didn't trade it, but, like, shoot. Now, probably coming on down. Workday. Coming on down. Seeing all this money leave, like Workday and Now and Salesforce and MDB, and flow into AI hype. That's, even Adobe here getting punished. And there's the target right down here. Had that target on Adobe for a couple years. KEX. Probably come back to the roadmap line. Snow. And that support down at 190. Datadog. Couldn't stick the breakout. And rejected the roadmap line here. This is a dangerous potential. Danger, danger, danger. So this can break on down pretty easily. I had a bigger correction that I thought we were going to do on Datadog. We just went up, tried to break out, failed. Now we may see a bigger correction. Autodesk. Yikes, man. Look at that. If we're trying to make America great again, we need engineering and design and all this stuff. Why are things like CAD software taking a bath? Doesn't make any sense. Charter communications. As we move away from, this is kind of indicative of traditional cable struggling in the face of space internet. EMP. Hadn't gotten above the 618 yet. Oracle broke down below supports, probably coming back down to 120 area. I thought, well, if we broke that, I thought we were coming on down here. And Tractor Supply. So the Tractor Supply here, one of the Tractor Supply local, they got a delivery, drove the fork truck, forklift thing, had a load, drove the forklift into the building, knocked the header out of the garage door, and almost collapsed the whole building. And that was 2 days back. And who did they call to help figure out what to do? Why, my engineering company. So, has nothing to do with the company itself, I guess. Just probably the local. I don't know that they own the building even. It could be that the building owner takes care of that, but they almost collapsed the whole thing though. The beam that was above the beam sitting up there holding the bar joist for the roof, funny enough, was installed upside down. It's supposed to have a camber, and it was actually sagging because it had been installed upside down. And the bar joist almost slipped off of the beam and collapsed the whole roof on top of the fork truck and all the stuff in the back of the Tractor Supply. MO kicked off the upside for 70. It's kind of stuff you wouldn't hear on the news. Potential retrace. AU, potential retrace. Wix, potential retrace. All right. 3 things set up for industry today. First Trust Tactical Commodity Strategy Fund. So that has a high up here, a low down here, entry there, potential to come up to 28.37. What caused that big gap? I would be careful on that one. PEG. Another one that I don't like that downtrend going. Has a downtrend for over a year. I probably wouldn't touch it. Twilio. And this one, interesting. So here's the high, here's the low. Just in the short term here, here's the trend. Here's the pullback. Here's the high. Here's the low. Stop is $1 below the low. This close above here kicked off this potential entry for 51 or 151 target right up here. 75% likely. Even if I turn on the statistics for this trade, it's going to have 4 trades. So You can flip a coin 4 times and get anything. You can get 4 heads, 4 tails, 4, mixed, whatever. So 4 doesn't mean anything. 30 is a statistical population. This doesn't have that. So fall back on historical average for this pattern. There it is. Secondary bounce would be like Amazon. It bounced secondary bounce right here, cruising on up. Want to see this, get that continuation for Amazon. So bias for the day. For those of you sticking around, let's check out the gamma exposure, see what we got cooking. Ooh, getting like yesterday we hung in the range. We did not close near the max pain kind of level. Let's see what we got cooking today. Hey, good looking. What you got cooking? Let's pull this over and save it in here. Let's pull up the gamma chart from bullflow.io and see what we got cooking. SPY. So we're pushing through the 30-minute roadmap line. This can spike a bigger downswing here. And oh my goodness gracious. Look at these big levels all the way down in here. 257. Got a 3 or 129 there. 230. 132, excuse me. 262. I'm looking at the wrong. I'm looking at one bubble and trying to read the numbers off another bubble. Holy moly, look at that. There's a 600 million for tomorrow. Down at 677. We might be taking a trip down there. So 685 is probably the bottom of the range here. Top of the range. And 696 if we bounce. So that's below the open, right at the open. That didn't look too good for today. It looks like we might be cruising on down to 677 on the path for tomorrow. Levels. That'll be interesting. We'll screw a bunch of calls, but the puts, there's a big put level right up here at 690 out for tomorrow. And we may strike a balance into the close tomorrow at 686. Which is right down at the bottom of the box. That looks like kind of like where we're going. We're going to screw all the call holders and some of the put holders, but not all the put holders. That's what it looks like right now. I'd be careful on that one. And then QQQ. Let's go check this baby out. That hung right. Look how close I got on that. Holy shnikes. So I thought we would close right the 634 area, and we were just down at 633. Man, that was, we were tagging it right into the close yesterday. Beautiful. All right, looking at the gamma for today on Qs. If you want to get a bullflow.io, if you want to access this, it's like $30-something a month, and links in the description. You can go to bullflow.io if you want to and just get it, but help me out. I get a little vig if you click my link down in the chat. I mean, down in the description underneath. And 620. Ooh, wow, look, another big level. Down at 615. So, what the heck? We might get a big dropout. This is not good. There's nothing today. I mean, down here at 620. And that's where tomorrow is. And then 615 below that. That's looking pretty bad here. It's like we're cruising on down. So 615 would be the downside. Upside, there's nothing. Maybe 633. Which is right in there where we opened. Yikes. So this could, they could take it on down here and then we bounce tomorrow. That's what could be happening. Yeah, be careful out here today. It's like a dangerous game. Puts are dwarfing the calls here. Where are we at here? 623. There we go. So we're hanging out at 623. Much more. Look at the size of puts played versus the calls, especially going into tomorrow's expiration. I wonder why we're still showing 628. That's weird. Yeah, I'm thinking right around that 620. 622 for today. So 622 maybe where we that's where we could screw the most people, but that also the big chunk is for tomorrow, so we'll see how close I get. That's where kind of I see the flip point. It's where, so visually, I'm just kind of taking the size of these bars on the purple side and the size and quantity of the yellow bars and just kind of balance it out. And that seems to balance right around 622. Where you screw the most calls and you screw the most puts right around 622. But that big OPEX is tomorrow, not today. Tomorrow dwarfs today. So that's the range I kind of see based on the gamma right there. Looking at the NASDAQ chart itself. There's the low, there's the high. Support is right down here at that 25.5 area, 25.520, and 25.520 divided by 41. It's roughly divided by 1, divided by 41, roughly at 622.40. That jives with the ES levels. Look at the NASDAQ move here. So we had this move up on QQQ times 41.11 is roughly the NASDAQ price. You see 25,630. And if we grab the NASDAQ price, 25,635. So that's pretty darn close. Then a dollar or two, maybe $1.03. I don't pay for live data on NASDAQ, trading view for NASDAQ. So looking for support right around here. QQQ, same situation. There's the low, here's the high. Look for the support right around here. And we may hit it and bounce up. Now, if we can hold on to the 30-minute, we could break back higher, but resistance for that would be back up at the top of the box. So we'll see what's cooking today. Seems kind of story on the SPY. Add the low and the high. And the retrace will be down here. That looks like price wise and gamma wise, options wise, that looks like what we're doing today. So hopefully that helped everybody kind of get a feel for what's cooking today. It's kind of my bias there. And I guess we'll see you tomorrow. I'll be on Market Masters 11:30. I guess we have a roundtable thing at 2:30 this afternoon about metals. I'm supposed to be on, and then I'll be back same bad time, same bad channel tomorrow morning, 9:15, right here on YouTube. We'll do it all over again. Look for opportunities, try to make some money, try to find some ability to make some money.